Hello, everyone. Thank you very much for joining me, and thank you very much for being so punctual. First of all, if I could just get you to put a quick message in the chat box. Chat boxes should be at the top of your screen, or maybe at the bottom actually, because you're the watcher. But if you could just put in there to say that you can hear me, that would be much appreciated. Ah, brilliant. Okay, I can see that you guys are replying in the Q&A. So chat is disabled, which is a bit odd because I can still see it, but there we go. No, that's brilliant. Okay, and I'm really pleased that you found the Q&A box as well, because if you've got any questions that you want to ask, then please use this Q&A box. If you put your questions in here, if it means that I have to answer that question before I can move on to the next question. Whereas if you just put your hand up or something like that, I know that's functionality that Zoom has, I might miss it. So just so you know, if you can please put your questions in here, that'd be great. I'm just gonna get rid of all of these I can hear you messages quickly so that we can get on with the webinar before. Otherwise, I'll just have to click them later when I'm answering your questions. So perfect. If you can please make sure that you use the Q&A bar instead of putting your hand up or anything else in order to ask questions. So thank you very much. Thanks for joining me here. 1 o'clock. 1 o'clock on a Tuesday. Who'd have thought that 1 o'clock on a Tuesday is going to be the time that's going to make such a big impact on your 2023? And yet here we are all together. So let's crack on. So first of all, who am I? Why am I talking to you about this kind of thing? So my name is Chris Kirkwood. I'm the franchise director here at Sourced. And over my time, I mean, I've been with Sourced for 5 years now. Sourced is 5 years old. Over my time with Sourced, wow, I mean, how many people have we helped make an awful lot of money out of property? Well, a lot of people. We're very selective about the people that we bring on with Sourced. We make sure that these are people that who can achieve, who are not only ambitious with what they want to do in property, but they're actually going to follow it up. Because there are lots of people out there that would have you believe that they're going to be able to do something, but then they don't actually have the action. They don't have the drive to take them forward. So we're quite selective about who we work with at Sourced. However, we've currently got 170 franchisees. We've made franchisees millionaires, and we're very happy to do so, and we will continue to do so. But before I joined Sourced, I set up multiple businesses in different business sectors, which is one of the reasons that they asked me to join, actually, because I'd started businesses from nothing, and I came on board with Sourced when they were, fairly similar. I only had a very small handful of franchisees, and from that, we've grown the franchise package, we've grown the facility that we provide our franchisees, we've made it easier for franchisees to make money out of property, and we continue to do so. For property myself, I was involved in property before I started with Sourced, and I continue to be involved in property right now. I've done deals from 55 grand up to 150 million, or been involved with deals up from 55 grand up to 150 million. So when it comes to bog standard flips, in fact, I've done deals lower than 55 grand because I've done rent-to-rent deals as well, which technically would be a lower cost, a lower in, although there's no purchase price. So I've done all kinds of strategies, all kinds of property development in executing my own portfolio, but also as part of Sourced, we have a system here where we help and support our franchisees. And part of that is to analyze the deals that the franchisees find. And so in terms of like getting deals across the line, I don't think there's a strategy out there that either me or the rest of the support team here at Sourced haven't been involved in. We know exactly what's important in property. We know what to look out for. We know how to analyze risk, and we know what to the direction to take a portfolio, to take money making within property, because we've been guiding this company through it for the last 5 years. And for me, I'd been doing it previously as well. So like I say, now I spend most of my time helping other people get through property, because I've got a fairly well systemized method for building my portfolio, for making additional wealth through property. Now I spend most of my sort of conscious time helping other people to do the same and follow the same footpath that we have. So when you first look at Sourced, you might look at, go to the website, you might get emails from us, and you might see different brands that we advertise. So first of all, I just want to take a minute to explain how those brands fit together and what that means to you if you're building your portfolio within property. So we're going to start on the left-hand side, which is the green circle, and that green circle represents Sourced franchise, and everything that we do, everything that we've ever done, has started with sourced franchise. It's where franchisees come to us for help to build their portfolio so they can make money out of property. And we offer them training and support and leads and funding. And then we offer them the facility to make money out of property by things like the property app that we've listed. And that property app is under the banner of sourced property. So if a franchisee wants to put a property out there to sell to an investor, they can do so on the property app. The other thing that we've started is sourced auctions. So if a franchisee wants to sell a property, they can do so through sourced auctions. So the property side, really what that is attracting is investors. And so we've set up property to be its own thing so that it attracts investors. And we offer them downloads, we offer them help, we offer them advice, we offer them insights into property. And then we show them the franchisees deals so they can buy the deals from the franchisees. That helps the investor, helps the franchisee. Now, at that point, if they don't want to buy a deal because they realize they haven't got the right risk appetite, they move across to source capital, because that's something that they can invest in without having to be actively involved in the deal itself. And they can get a good return from source capital. Now, source capital exists. If you don't know what source capital is, it's a peer-to-peer funder that's FCA regulated. And source capital can fund franchisees deals. So we attract investors in, we either send them directly to the franchisee or we send them to source capital, and under the banner of source capital, they can fund deals which only the franchisees can put deals across to source capital for funding. And in fact, in the last 3 weeks, we funded 2 deals for franchisees, and we've currently got another deal that we're funding right now. And then after that, we've got the top circle. So source capital's on the right-hand side, and then we've got the top circle to complete the overall circle, and that is the source developments, and that's where we're doing our own developments. So we are here not only helping and advising people about property, we're here not only helping and advising investors about property, we're here not only funding property deals, but we're doing it ourselves. We're actively involved in property, and we are quite happy to talk about the stuff that we're involved in. It's absolutely critical that people that you take advice from are involved in property on a day-to-day basis, because if they're not, they haven't got their ear to the ground in terms of legislation changes, in terms of contract changes, in terms of finance changes, to be able to advise you, help you, train you properly to be able to make the most out of the situation that you're currently in. Now, how to dominate in 2023? Funnily enough, I just scratched my head, just like the woman in the picture. How to dominate in 2023? Like if right now you had a piece of paper in front of you and somebody said, you tell me how you're going to dominate property in 2023, and it was down to you to write out your ideas for how you were going to achieve that, you would probably end up fairly confused, because not only is there a huge amount of information, a huge number of people that are advising within property, but when you get into property, the minutiae, the legislation, the levels of information that you can access is mind-boggling. We've been involved in property, we've done property for a long time. There is no way that we've even scratched the surface with everything that, the depths that you can go to in property. There's just too much information out there, because once you've done property and you understand how to put deals together, which is where our niche is, which is where we're very good, you then get into building regulations, you get into building materials, you get into architects information. There's a huge amount that you can get into. So you probably end up fairly confused. So for us, let me just get rid of that. It looks like something's recorded on there, so I'm just going to show you the slides from this view for the foreseeable, and then I might go back to it a little bit later, the full view. So apologies for that. So when you're looking to get involved in property, when you're looking for what you need to do, how you need to facilitate that, you need to break it down. You need to make it simple. And this is what we spend a lot of our time doing. To be perfectly honest with you, we spend a huge amount of our time making things simple for people, because human beings as a race seem to want to overcomplicate things. And yet, we're running a very big business here. The simpler we keep it, the easier it gets. So when we're looking at 2023, when we're looking at what you want to achieve in 2023, let's just keep it simple. Now, you might know that Sourced is a franchise network. So all of these, the people, the 170 franchisees that I mentioned before, they've come on board with us in order to listen to our help and advice. Now, one of the things that I need to make absolutely clear for you guys is that there is a charge to the franchise. And if that's something that you can do, then fantastic. I'll get into a little bit more detail about that right at the end. If paying for this kind of help and advice and coming on board with Sourced is something that you can't do, then by all means, enjoy the webinar. It's here for everybody. And when we get to the bit at the end, when we're talking about the price, then maybe that's not for you. Also, at the end of this year, we're going to have a price rise. Well, we're going to have a board meeting in order to discuss a price rise, because we haven't risen the price of the franchise for the last 3 or 4 years. And, you know, with everything that's going on at the minute, with cost of everything increasing, this is something that we need to take very seriously at the end of this year. So just to make you absolutely clear about that. So what do you need to dominate? Let's have a look. Well, this is in no particular order, but this is the stuff that I think is absolutely essential. And to start off with, we're not going to get into the market and how to take advantage of the market. Start off with, you need to be in the right place in order to dominate 2023. And that isn't, if I said to you what the best strategy is going to be for 2023, it wouldn't matter. Because if you're not in the right place, if you haven't set, for want of a better description, if you haven't set the right foundations to achieve that, then you're just not going to be able to deliver that, whether you know what the best strategy is or not. So let's first of all look at your package. Let's have a look at you and what you need personally before you can either make that transition into property or scale up the business that you already have. Because we have a lot of people here at Sourced who are already in property, but they're laser focused on one strategy. And that strategy, 9 times out of 10, is a cash flow strategy, because they want to get out of the business that they're already in. Now, once they've laser focused on that cash flow strategy, they want to take the next step, because now they've got a pot of money sitting by their side. And now they want to get into making serious money out of, you know, small developments, flips, refurbs, that kind of thing. Now, it's at that point that they realize that, you know, because they've laser focused, all they've looked at is that one strategy, and they don't know how to deliver the next strategy. And so a lot of people come to us in order to scale their business, not just start their business. So what do you need to dominate? First of all, as you can see on the screen, education. You need to know what you're doing. So many times we go to networking events that are held across the country by, you know, different companies, different individuals. And you hear people talking about jargony sort of phrases like Article 4, like permitted development, like use class E, PDMA, conservation areas, that kind of thing. And I, you know, listen with an inquisitive ear to hear, you know, what they're saying about it. And Article 4 is like the best example of this, where people just fundamentally misunderstand what it means, what it stands for, what the opportunity is for you, and what the restriction is for you. So education and understanding property as a whole, and I'll tell you the bits of property that you really need to know in just a few slides time, that is absolutely critical for everything that you do within property. Imagine you have a misunderstanding of something. Let's say it is Article 4, and you find a property deal and you think, yeah, that deal works. I can put the numbers together and it seems to work really well. And you start to put money into it. You put an offer in and the offer gets accepted. Then you instruct a solicitor and you do surveys and you do searches. And as you get further down that conveyancing process, all of a sudden the solicitor comes back to you and explains the restriction that is on that property or on that geographical location. And it shows that you can't do what you were expecting to do. Fundamentally, you should have picked that up when you were first analysing that property and doing your due diligence. The more educated you are when it comes to property and understanding how to put a deal together, the quicker you can analyse deals. The quicker you can analyse deals, the more deals you look at, the more likely you are to find something that suits your requirements for the kind of deal that you want to buy, you want to make money from, and you want access to that profit margin. So first of all, education. In fact, I've got some slides that are breaking down education in a minute. I'm sort of spoiling it because I'm going ahead of myself. Secondly, we've got support. I'm going to explain exactly what support means, because support is another one of those words that's sort of banded around within property. but people have different definitions for what that means. Then you've got funding and where you're going to get funding from. Now, this is particularly pertinent right now, isn't it? Because right now, funding is an issue. You're out there looking for funding for your deals, and you see that the lender that was in place last year is no longer anywhere near offering you the same kind of deal. And people are seeing that absolutely everywhere at the moment. You've then got software. So how are you going to organize your time? What are you doing to make sure that everything is organized so that deals and opportunities don't slip through the net? Then you've got network. Now, your network is not only there to solve problems for you, to help you in a situation that has become difficult, but they're also there to provide new opportunities for you. So what we're talking about here is not only the network that you build within property, but also the network that is pre-existing. You've then got a team, and the team is sort of the core guys in your network. So the people that are actually delivering and helping you deliver projects. We've got defined processes. So some things you don't have to set up yourself. Some things you can jump on other people who have already set something up for you, so that you can get the benefit from it without having to set it up from the ground up. Then we've got two things that I think I've left till last on purpose, because I want to leave you at the end of this webinar with these at the forefront of your mind. And that's mindset and your plan. Mindset, I cannot stress to you how important it is that you have the right mindset in order to make progress in property. We'll go into it in a little bit more detail. Hopefully, well, let's start with this. Mindset and the ability to improve your mindset starts with your self-awareness. Let's be completely honest, right? When I first got into property, my mindset wasn't where it is now. And in the first property development that I did, the first property that I bought was just a straightforward buy-to-let, bog standard, straightforward buy-to-let, nothing complicated about it. The second one was a refurbishment. And in that refurbishment, things went wrong. And we were on quite a tight deadline. But when things went wrong, because of the mindset that I had at the time, it would take me a few days to go through the process of me dealing with something that didn't work well, that went against me, that was a roadblock, instead of allowing me straight through. It would take me a couple of days to overcome that, to get to the next level, to then work out what I was going to do to solve that problem, and then move forward. A couple of days. Whereas now, because this is something that I've specifically worked on in myself, now that takes me a maximum of a couple of hours. So I still have the same process. I'm not trying to change the way that I deal with a situation. What I'm trying to do is fast track to the solution. So we'll talk about mindset in a little while. And then plan. If you don't know where you're going, if you don't know your direction, what is it you're actually trying to work towards? And the way that we create plans here at Sourced is a way that I would recommend. In fact, it's the way that I create plans in my personal life as well, because it works so well. And then when we've got those 9 points under our belt, when we understand foundationally what you need to do in order to make progress in property, then we'll start looking at property. At that point only, we'll start looking at the market and how you can work with the market in the current state. Because the market in the current state is completely different to the market 6 months ago. So we need to be not only flexible in order to pivot when the market changes, but we need to know how we can deal and how we can best get the most out of the market in its current situation. Right, I'm just going to try the full screen again because we're on the next slide now. So hopefully there won't be a recording over the top of this. There we go, perfect. It might happen again later. If it does, I'll do the same thing. So first of all, education. We talked about this quite a bit already. Now, when it comes to education, you need to know what you need to know, right? Because there are lots of courses out there that will say, like, come and learn everything about HMOs in a free day, and then on the when you go there, you'll go onto a weekend course. And on that weekend course, it'll be learn everything about HMOs on the weekend course, because the day was just a one-day thing. And then after that, you'll get subscribed into a longer course. And it's always about upselling. Now, our contention at Sourced is that actually that's not the right way to structure what you need to know about property. Because yes, there are some differences between a HMO and a commercial conversion. Of course there are. But essentially, the way that you buy that property And potentially the way that you exit from that property might be exactly the same. So you might buy that property with a really creative strategy, a really creative way of buying that property. But you can do that with a commercial conversion or a flip or a buy-to-let or a HMO or absolutely, or just a plot of land. It doesn't need to be a property. So really, is going on a HMO course the most useful thing that you want to do when what you're trying to do to start off with is educating yourself generically through property, so that when you're generically educated, you can then make your decision as to what strategy suits you from a position of knowledge rather than just guessing which strategy suits you. So not only do you need to know that side of how you buy property and the ways that you can structure deals so that you can purchase properties that previously you might not have been able to, just because of the way that you've structured it means that that is now open to you. But also you need to know about the mechanics, the way that the system works, the way that property itself works. And that's specifically talking about something like planning. It's a very, very structured process for dealing with planning. And understanding what you can and what you can't do is critical in you understanding what is available to you. Because, let's look at the difference between, off the top of my head, permitted development MA, mercantile to abode, use class E to use class C3. Now that might not mean anything to you whatsoever, but it could be the difference of £100,000 in a property deal, because you might be able to use that permitted development to turn something from use class E commercial into use class C3 residential, probably a block of flats, without having to go through full planning. Now that can cost a huge amount of money, not only in architects' fees and drawings and all of that kind of stuff, but also in the planning application itself. So understanding and educating yourself in the mechanics, not only how you buy property and how you facilitate property, is absolutely critical. Now, I'd say that when you're looking at property education courses as well, it's important to go with people that understand the good and the bad elements of property. And what I mean by that is, if you're going to one of these sort of pyramid upselling kind of places, and they're fairly obvious, you see them everywhere. They're more likely to focus on the good stuff because they want you to believe that it's possible for you to do it, even though the bad elements of it and the negatives of doing that kind of property structure, property course, property whatever, might prohibit you from being able to do it. Now, the perspective that we have with our franchisees is that, we're all 170 of them, we've got 5-year contracts with every single one of them. And therefore, it's more of a business relationship that we have with them. So we're not incentivized in any way to just talk about the good stuff involved in property. We talk about the good and we talk about the bad, because again, it's all about the deal analysis. It's all about looking at that deal and understanding, well, this part of the deal works really well, but this part of the deal doesn't work. And that's going to prohibit me from doing it. And therefore, I need to forget this property and I need to start looking at the next one. Time and time and time again, I've seen people obsess about a property because they found it and they started doing their due diligence, but it was the wrong due diligence. But because they'd put so much time and effort into understanding that property, they didn't want to let it go. And they clung onto it, thinking that they could make it work somehow. I had a conversation last week, actually, with somebody who said, put the deal across to me. And my feedback was, well, let's have a chat about this because it clearly doesn't work. So, the way that you're looking at this might be different from the way that it's on paper. So let's talk about it. And they said to me, well, yeah, the deal calculator doesn't work in its current form, but what I'm going to do is I'm just going to take 10% off there. I'm going to take 20% off here. I'm going to add 20% on there. And I said to them, what's that based on? What is this 10% and 20%? And, what are these changes based on? I just think I'll be able to do that. Thinking you'll be able to do it is not a way to move forward on a property deal that it's going to cost, you're going to borrow hundreds of thousands of pounds to do that property deal. You need to understand what works, what doesn't work, because understanding what doesn't work and walking away from bad deals is just as important as saying yes to the deal that is right. Property essentially comes down to contracts, finance, and legislation. That's what you need to know. Now, what we do here at Source, and I would recommend other people do the same, if you can find somebody that does, great, is you look at contracts, finance, and legislation within the courses. So for us, we still have a HMO course, we still have a commercial conversions course, but during those courses, we concentrate on contracts, finance, and legislation, so that you come on the commercial conversions course, or indeed you come to induction, and you know how to buy a property and how to structure a deal, because that's relevant for absolutely any property. After that, the stuff that you need to know for HMO or for commercial conversion or flip or service accommodation or whatever is actually relatively short in comparison to everything that you need to know about the property, about the contracts and the finance and structuring deals. So I mentioned support, and I mentioned that lots of people do support. So what actually does support mean? Because I know that there's companies out there that do support, which is like 45 minutes once a month, something like that. You can have a 45-minute meeting with somebody once a month, and that's all structured. Well, you know, for me and the way that we set up at Source, that isn't what you need. For me, I think what you need is much more flexibility within support. So if you need to talk to somebody because you've just been in to talk to an estate agent and they've come back to you and they've like thrown a spanner in the works, and you need to talk to a support person because you need to know how to go back to that estate agent, then that's what support should be. It should be immediate. It should be reactionary. And that's exactly how we've set up here, because we want our franchisees to be able to move forward and not have to wait for the 28th of the month or whatever it is before they get their 45-minute meeting. It should be very structured. Now, we want that sort of operational support of what they should do at any one point, but then also from our point of view, they should be analyzing deals. Again, that falls under the operational stuff. So the support person should be looking at every one of the franchisees' deals to make sure that it works properly, which is a great benefit, right? Because that's another set of eyes on your deals. From us, we also have one-to-one meetings upon request, but then this is the next level of support. This is goal setting and then accountability, because not only should you be operationally looking for somebody who can help you from a day-to-day basis on every single thing that you're looking at, but also you should be looking at the business overview. So every now and then you should take a step back, look at your business, look at how your business is performing, plan for the next phase of your business, and review the previous phase of your business. Now, we do that in every quarter. We have quarterly meetings throughout the whole of the network. Every franchisee is invited to it, and we do our goal setting sessions there where we look back and we look forward, because not only are the franchisees doing it with their support people, they're also doing it with other franchisees, with the network, so they can see who's doing well, who's not doing well, you know, what decisions have gone well, what decisions haven't gone well, because not every decision will go well, because this is property. We also offer on-patch support, and we offer diary access, so our franchisees can actually book into their support people's diaries whenever they want to. They just click on the Calendly link, they see when the availability in the diary is, and they can input into that straight away. Now, that is what support is. For me, that covers every layer of support. And if you're looking to get somebody on board with you to offer you support so that you can maximize 2023, that's the kind of commitment that I'd be looking for from support. On to the next one, and on to funding. So funding, this is difficult in this market, isn't it? Because lenders are reducing their loan to values and they're increasing their interest costs, which makes funding less appealing when you're looking at your deal. But look, this is just a normal property cycle. If this is the first time that you're looking at property, this is how it works, right? When funding is easy, finding deals is difficult, because funding is easy. So those deals that people see are getting snapped up in seconds. We saw this just a few months ago where deals, the average length of time that a property was on the market was something like 2 weeks. That's ridiculous. When funding is easy, finding deals is difficult. When funding is difficult to obtain, finding deals is easy. And that's where we are at the moment. Funding has been withdrawn because of the economic situation that this country finds itself in. Funding has become difficult. Now, that means that finding deals, there are fewer buyers that open in the marketplace, and therefore finding deals is easier. So you'll be looking around and you'll find a deal without too much problem. However, getting that funding and getting that across the line becomes an issue. So right now, I would say the difference between people who are making the most out of property and really driving their property business forward and their investments and their portfolio forward, and the people that aren't, is access to funding. And if you can find a funder, then, you know, happy days. You've got limitless number of properties out there that you could make money from. Now, for us, we have Source Capital. Source Capital is an in-house lender, and it only lends to franchisees. FCA regulated peer-to-peer platform. Like I said, funded 2 deals in the last couple of weeks, currently funding a 3rd right now. And Source Capital will lend up to 100% of the purchase price and the build cost. Up to 100% of the purchase price and the build cost, which is, as long as it doesn't go over 70% of the GDV. And again, this happens all the time from Source Capital. Now, that is available to our franchisees. I know about Source Capital, which is why I'm talking about it. There might be other lenders out there that are working from a similar platform, a similar level, a similar amount of loan to value. And if you can find them, fantastic. But you need to make sure that you're looking for these lenders, because it's no point looking on Rightmove for hours to find properties to then have absolutely nowhere to take them. Again, we have a lot of franchisees that join us because they want access to different levels of education, support, and also Source Capital for up to 100% of the build and purchase price covered. So funding is out there. Funding is currently difficult, but that doesn't mean that it's impossible. So you need to go out there and you need to find out, by all means, go to brokers, go to the funders themselves, find out what their loan to values are, find out what their interest rates are, and then work out whether that incorporated into that deal makes that deal work or not. For us, up to 70% of the GDV, that's what we can fund for our franchisees. In terms of software, now this might be something that you hadn't even thought of, but when I was building my letting agency many years ago, this was the first thing that I had to look at, because I wanted to make sure that the first person across my path had the same level of service as the 100th person across my path when I was much more established. So I made sure I put some time and effort into understanding the software solutions that were out there. And in my letting agency, the rule that I had in my head was, if somebody comes to view a property, I want to be able to move them in 15 minutes, having done all of my tenant referencing checks, all of the deposit information, contract signed. I wanted everything to be operational from my telephone. And that's how I set myself up. And to this day, within Sourced, we make sure that we're working with the best possible software in order to provide the same level of organization. In fact, we're currently redoing our CRM system right now. We just had a play with it yesterday for the new one, to help our franchisees organize the properties that they're buying, and then organize the investors that they're dealing with as well. It also helps you analyze deals quickly, which is something that we're putting into place again for our franchisees next year. Some software that will help them check on comparables and understand whether the deal works as quickly as possible. Because what that means is they can review more deals. You can also set reminders to follow up, because in many cases, in fact, we're buying a property in Kings Lynn right now, which fell through from a deal that was accepted in March. So in March, we put an offer in for this property. Our deal didn't get accepted because they went with somebody else. The deal fell through. But the franchisee who was working on that deal on a joint venture basis with us followed up with the people who were selling the deal, found out that it fell through, pushed our deal, made sure that they understood our deal was still on the table, and now we're the purchasers of that property, all because of the follow-up from that franchisee. Task reminders and that kind of follow-up is absolutely critical in making sure that you're not letting deals fall through your net. So this provides the core organization within your business. Now, we talked about network and what the network can mean for you, essentially your network is going to provide you all of these things: opportunity, reassurance, help, perspective, and solutions. If you're not in, well, look, you've got a network already. This is the biggest mistake that people make when they get into property. They think, well, I'm in property now, so what I'm going to do is I'm going to build my property network, and I'm going to start from zero because I don't know anybody that's currently in property. Mistake number one. What you should do is you should inform your existing network that you are in property and you are looking for properties. As you then buy properties, you're going to be talking to surveyors and solicitors and estate agents. Every single one of those people should know that not only are you buying this property, but you are looking for more properties. You need to keep property at the forefront of your mind in every conversation. I went to hospital a couple of weeks ago just for a checkup. And when I was in hospital, I was talking to a doctor, obviously. And when I was talking to that doctor, I turned the conversation around to property. Turns out everywhere that he's gone, he's bought property, which he's kept. He's now got a portfolio of 5, and he's thinking of selling them off because he's thinking of retiring. So he sent his properties over to me so I can have a look at them. They're not on the market. They're not anywhere near the market. He hasn't even explored, estate agents to sell them yet. But I went to have a conversation with somebody that I didn't know, and I made sure that I turned it around to property. And not only should you do that with people that you don't know, you should do it with people that you do. So your existing network, how many of them are in property that you have no idea? You have no idea what they do. It happened to me. So many people that I knew were already in property, had buy-to-lets, had rental accommodation or whatever, and we'd never talked about it. The first opportunity that you find will most likely come from your existing network. So it's really important that you tell everybody that you know that you're in property. Once you've done that, take time to build your network. Go out, see people, talk, go to networking events, talk to people. Just talk to as many people as you possibly can about property. And then, as per the previous slide, make sure you follow up with them. Make sure you follow up to stay in touch with them, and they don't, come into your network and then disappear from it. Now, talking about a team and the core area of your network, these might include an architect, main contractor, project manager, QS, trades, estate agents, sources, etc. So these are the guys that are actually on a much more operational level involved with you in property regularly. And you want to make sure that the people that you're mixing with, your architect or your main contractor, have got the same focus and ambition as you have, right? Because just because they're an architect doesn't mean that they're really keen to do the next deal. We've seen people that really drag their feet, and they've been in property for years. They drag their feet. They're not dynamic. They're not moving forward. They're not solutions orientated. And if that's the case, you get rid of them. You take them out of your net. They can stay in your network, but they're not part of your main core team. Your main core team should be people that, as the bottom quote says, you're the result of the 5 people that you spend the most time with. Right, so choose those people wisely. In terms of defined processes, so you've probably got big property goals, but when you first start out, you're going to be much more focused on cash flow. So you need to build that cash flow. You need to exit from the job that you're doing or whatever, or build just the cash flow that's going to pay your monthly bills, so that you can then get on to bigger deals. Because a big deal is going to take 18, 24 months, something like that. So how are you going to get to the end of that big deal? Because at the end of that big deal, that's where you make the money. So you need to work on a cash flow strategy in order to get all the way through one of these bigger deals, which is where your ambition really lies. For us, what we've done for our franchisees is we've built the Source Property app to help them sell their deals. We've also created sourced auctions. So again, it's just an auction facility where the franchisee can go out, find deals, sell that deals, and the franchisee makes a commission. The same with the app. A franchisee can sell a deal and they can make a commission. We've also set up something called sourced furniture, which is like HMO and serviced accommodation furniture. And again, the franchisee can either put that into their own properties for a discount, or they can tell other people about it. And if they happen to sell anything, then they, again, make a commission to work on their cash flow. Now, just to caveat this, there are lots of other different cash flow strategies that you can use. These are just some processes that have been set up by us to help franchisees move forward. I don't need to say much more, do I? It absolutely is the game changer. Look, we deal with lots of people who are experienced developers. We network with experienced developers, and we see the things, we see the attitudes, we see the personalities that succeed. And for us, mindset is absolutely critical to that. Because you can have mindset conversations, and I frequently do have mindset conversations with lots of people who understand the theory. And it's quite, I always find it quite amusing to talk about the theory of mindset with somebody and then see a situation come across their path, which then creates an emotional response within them. And then all of that understanding of mindset goes out the window. And they just revert back to that same 4-year-old self who developed that system of behavior, that strategy of behavior when they were 4 years old. Because a lot of your strategies, a lot of the ways that you deal with things were developed by you as a 3 or 4-year-old. Now, that is not necessarily the best way to deal with that input. So understand, like this is what I said earlier, the first step in mindset is self-awareness. So understanding the way that you react to something and why you react to something, and then coming up with a solution to say, well, in the future, I want to react like this, or I want to get around this quicker in order to come up with to get to the solutions part of this process is absolutely critical. I didn't do that on my own, to be perfectly transparent. I did that through, at that time, again, that was before Sourced. I did that through the support of a mentor, which I employed for a period of time to really get to grips with understanding that sort of self-communication. If there's a couple of things that I was going to say in mindset that to sort of differentiate people who are in property and succeed against people that are in property and find it more difficult, it's resilience and clarity. You know, what is the focus? What are you trying to achieve? You need to have that clarity for that big goal that you're trying to achieve and how you're going to get there. And then the resilience is, you know, no matter how many times you get punched in the gut, you're still moving forward, because it happens all the time. Other people make mistakes that you can't mitigate for, but the responsibility of coming up with a solution for those mistakes is firmly on your shoulders. It happens all the time. Whether you're doing rent to rents, whether you're doing deals that you're going to trade on, whether you're doing flips or refurbs or HMO or service accommodation or commercial conversions or new builds, it doesn't matter. You're going to face hurdles and you need to overcome them. And then once your mindset is sorted out, you need to come up with a plan. And this plan will give you the clarity and the direction and the reassurance that you're moving in the right direction. Now, your plan the plan that you create should always be to stretch you. You know, you don't want to achieve something. Well, look, to be honest, this depends. But usually you want to stretch yourself because you want to achieve things that you've never achieved before. And then on that journey, you want to set yourself accountability markers. Those days where you just don't get involved in the business at all. You take a step back, you look at the overview, and you work out how well you've done and what you need to do in the next period of time in order to still hit your targets. As the saying goes, you're rigid with your goals, but you're flexible with your path. So the destination that I'm getting to is not going to change, but the way that I get there and that I might need to pivot is absolutely critical. Because look at the property market a year ago. Look at the property market now. Completely different situation. So the way that we achieve what we want to achieve here at Sourced, we're going to go about it in a different way now. But we're still going to get there. We're still going to achieve the same thing because we understand, as I said before, contracts, finance, and legislation. And therefore, we understand how we can maneuver in the changing environment to still hit that goal. When you're putting your plan together, and when you're taking into consideration what's going to happen next year, you also need to be aware that it's not just about what you want to achieve. It's not just about your ambition. It also matters what your personal situation is. How much time can you put towards this? How dedicated are you towards this? What's your financial situation and what money can you put towards this? Because let's be honest, the more money you've got, the quicker you can achieve those goals. What's your risk profile and what kind of deals you're looking for? Because if you're not very risk tolerant and you're looking for, you know, complete refurbishments or new builds, you're probably never going to buy a property because you'll be so scared of things going wrong, because you need an element of risk tolerance to do that kind of deal. So in that case, you need to think about a different way of investing your money to make a return that suits your risk profile much better. And then lastly, we look at ambition. All of those things combined then go into your plan. And they need to be taken into consideration when you're creating this plan, because each one of them could be absolutely critical. And then I put in here something that we do with our franchisees, which is joint ventures. So for our franchisees, if they find a property, but they don't have the experience in order to do that property, they can come to us and we'll do that joint venture with them. In our case, what we do is we put up all the money, or we can put up all the money. You know, it can work in lots of different ways. We can put up all the upfront money as well as the funding from Source Capital, and we can allow them to, you know, come and learn from the project, but they still get access to the profit margin. And that's a really good way for people to see what they can do in the future. We've got a couple of franchisees actually where the first project that they've done, big project, has been a joint venture. Second project that they've done has been a joint venture. The third project they've done it on their own, because at that point they've got the skills and experience to be able to handle that project on their own. So the first project they did, they share the profit margin. The second project, they share the profit margin. The third, they keep that profit margin all to themselves. A great system. And if you can find people out there that will do something similar, it's, you know, something worth looking at. Let's now get on to the 2023 insight. I'm just going to take a little drink of water. So like I said, high cost lending. The interest rates of lending is very high at the moment, and the loan to values are very, very low. Therefore, there are few buyers in the market. And because there are few buyers in the market, those people that go to the market in a motivated state, you know, they need to get rid of their property. They'd ideally like to sell it as soon as possible. Those motivated sellers become more motivated because now there's not any buyers out there who can buy those properties. Whereas previously they'd all sell really quickly and everyone would be happy. Now, it's not the case. The buyers aren't there, and therefore the properties remain on the market. And the sellers get more motivated and slightly panicky. And that's where you can come in and you can negotiate a very, very good price for that property. Therefore, those that have got access to funds clean up. Now, you probably remember 2007, 2008. And for years after 2008, you would have conversations with people that were involved in property, and they'd be telling you about this bargain property that they bought for 50% of the previous value. You know, absolutely that happens because people with funds have got all of the power in that negotiation. So first of all, you need to make sure that you understand where your funds are coming from, or what the level of your funds is, whether it's just from yourself or whether it's from a lender like Source Capital. And then you need to be patient to look for the deals that make sense. So from our point of view, we still look at the same number of deals as we always have. When the market was really hot, when the market like now has cooled down, we still look at the same number of deals. But now our acceptance of profit margin has gone up, because we're expecting the properties that we buy now to have a lower, to be bought for a lower purchase price than they would have been bought for a year ago. And therefore the profit in that deal should be higher, because we've got access to funds. You want to be in the same position. Funding is going to be the most important thing of the next 12 months for you, regardless of strategy. And if you can't sort funding out, and that's why I put them in this order, sort your funding out first, look at the strategy second. Because the strategy, you know, you'll be able to see, I'll show you in just a second, but you'll see that some of the strategies are a relatively lower cost than others. But if you can't get funding to the level that you need for the higher cost options, which have got bigger profit margins, what's the point in looking at them? So we've got to this point now where we start to look at property, right? Everything that we've talked about previously is about setting you up, getting you ready to be in the right position to dominate property in 2023. Once we've set you up, we then start to look at funding, and where's the funding going to come from in order for you to dominate property in 2023. And then finally, we look at the strategies. So motivated sellers, like I previously said, are going to be, much more prolific, even on Rightmove, than they had previously been. People who have inherited properties and they can't afford to keep those properties, but nobody's out there buying property, and therefore they have to keep racking up those bills from the council tax, for example. Very motivated to get rid of them. The opportunity of using lease option contracts is huge in the next couple of years. Now, what would you do with that? Because essentially, if you're going to buy it and then you're going to just try and resell it straight away, well, you've got the same problem because the buyers aren't out there. So the types of deals that you're going to look for are the types of deals where you can buy it for a really good discount. You can rent it out and cover the costs. And then once the market recovers in a couple of years' time, you can sell it and you can exit with a decent amount of profit. That's the kind of motivated seller deals that you're looking for right now. Second option is high-end HMOs. If you look at the overall economic situation of this country, young people are choosing to rent. They're not choosing to buy because they can't, because the lending isn't there, as was previously talked about. So they're choosing to rent. But rents are going up because they're getting very competitive. So therefore, what are young people's options? Well, essentially, they are to move into HMOs. But young professionals who want to move into HMOs or would consider moving into HMOs don't have a lot of choice, because the high-end HMO part of the market isn't very well catered for. That is a niche that I think will expand dramatically over the next couple of years as more and more demand goes into these high-end young professional HMOs. To the point where we're actually building one at the moment, a 24-bed HMO, and we're looking for more. A 24-bed HMO we're building right now, very, very high-end. It's going to have a gym, it's going to have a cinema room, it's going to have, communal areas, really high-end, because that's what the market is telling us that it needs. And then finally, the third strategy, and definitely something that we're going to focus on more so next year, commercial conversions. As you may have heard, we've put out a lot of information about this kind of thing in the past year or so. Because of the permitted development change, because of the use class change within the planning system, there's been a huge opportunity that hasn't really taken off. It hasn't really been taken advantage of since COVID, because the PD change came in COVID. Commercial conversions became much more of an opportunity within COVID, and the market's never really been had that demand restored to it for commercial since COVID. Still a huge opportunity for you to look at commercial conversions and convert those commercial conversions. In fact, one of the webinars that we did previously was all about commercial conversions and converting into flats, and how you can identify those opportunities, how you can analyze those opportunities, and then how you can deliver those opportunities. So that might be a webinar that you want to have a look at. But they're the three strategies that for next year, that's what I would be looking at. However, I'm going to caveat this because they might not be right for you. Because this isn't taken into consideration your personal situation, your financial situation, your ambition, and your risk appetite. You've got to look at those things first before you consider the strategy that's right for you. Because these strategies might be the most lucrative from a generic point of view in 2023, but if they're not right for you, you're not going to be a success at them. So you need to look at yourself and what you can bring to the table, what you can achieve, what you can do first, and then select the right strategy, because the right strategy for you next year might be different. So how should this affect your plan? Like I just said, that's exactly the point of what I've just said. It needs to be about you first. Personal situation, financial situation, ambition, risk appetite. Now, just to go through all the stuff that we've previously mentioned and the things that are important, I wanted to show you some of the places that you can get hold of these things, because there's plenty of people out there in property that can deliver all of that help and support and leads and all that kind of stuff that you need. So for training, on the left-hand side, if you're looking for training, well, you can get that from a trainer. If you're looking for support, you can also get support from somebody that offers property training, but it's not unlimited, because the next category is unlimited support. For unlimited support, you might have to go to a mentor to get that. Now, for property trading, you're probably looking at a couple of grand for a weekend. And for a mentor, you're probably looking at 400 or 500 quid per month, something like that. If you're looking for investor leads, then you would have to go to a lead generation company for that. Investor leads normally cost about 15 quid per investor lead. If you're looking for property leads, again, that lead generation company might be able to help you. And for property leads, they usually cost about 50 quid per property lead. Look, we know this. We're very deeply involved in property. We are property people. If you're looking to advertise properties out on an app or to just advertise properties, you would have to go to an agent, because you're not a Source franchisee and therefore you don't have access to the app. And then if you're looking for funding and an agreement in principle, you would need to go to a lender. So these are the places that you're going to go to facilitate all of these things. That agreement in principle is, by the way, absolutely critical to securing property, because agents don't want to secure property unless you've got proof that you're going to be able to fund it. So an agreement in principle is critical. We have one which we have a policy for our franchisees where we have a 2-hour turnaround for an agreement in principle. As soon as they request it, and so long as they put all of the information in for the deal, we can then give them an agreement in principle very promptly. And for the opportunity to do JVs, well, that JV partner, because they're probably funding the property, they can probably provide that agreement in principle, but also the JV partner should be able to fund the rest of the deal as well. Obviously, at Sourced, we do all of it. That's what we do. We know what is necessary for you to get deals done, because we do deals. Every single day we're involved in property. We know the important stuff. We know what people need in order to start a property business, in order to scale a property business, in order to take that next step and start new build developments, whereas all they've ever done before is rent to rent. We understand how that works because we've been there and we've done it. We provide all of these things for our franchisees because that's how you get success. So at that point, that's the presentation sort of over with. So I'm quite happy to stay here for a minute and answer some questions if anybody's got anything. So I'll just keep the screen open like this for like the next 25, 30 seconds or so. And if no questions come through, we'll call it a day at that point. And if they don't, we will, if they do come through, I'll obviously answer them. And in fact, just while people are typing, because I know that that's how it normally works, I just want to go through, for us at Source, some of the big things that are happening towards January of next year. First of all, we've got that meeting to potentially raise the price of the franchise at the end of this year. If you are interested in Source, now is the time where you need to get in touch with us, ask the questions, find out more information. And if you're in the position to move forward, great. If not, then we can create a plan for you for next year. But get in touch now. We've actually got our next summit, our next quarterly meeting of all franchisees on the 13th of January. So if you were to join fairly promptly, you'd be able to come to that meeting on the 13th of January and start that goal setting process like we talked about previously. We've also got induction training at the end of January as well. So if you're interested in getting started as quickly as possible, the end of January is the first induction, but actually you would have facility and you would have access to absolutely everything else that we have here at Source before you come on board at the end of January. And really, the next thing that you need to do is prepare for 2023. Are you in the position to move forward with property? Can you do it? Do you have all of the requirements? And if not, you need to start moving forward. I didn't mention it, did I? So thank you for the first question. How much does it cost? To become a Source franchisee at the moment, it costs £12,500 plus VAT, plus £245 plus VAT per month. We don't charge when you make a profit. You could make £10 million from a property deal. We would take no part of that £10 million. That is your money, unless we're JVing on it together, where we've obviously agreed the profit split. But just normal property deals that you would get funded from Source Capital, you keep your profit. I hope that answers your question. Do you work with a really handsome guy down south, Chris? Oh, Adam, you follow me around everywhere, don't you? Hello, Adam. Yeah, of course I do. I think he's called Adam. Have you met him? Nice to see you here, Adam. Thanks very much for joining. What are the terms of the 100% funding, percentage interest and percentage split? Well, the percentage split would only be based on whether it was a JV. We wouldn't normally split. If you were doing the project for yourself, we wouldn't normally split. Look, there are lots of there are lots. It's funding from a lender, right? So in order for you to understand that better, what I would suggest is download our brochure, go to our website, sourcedfranchise.co, and then download the brochure, which has got like a more in-depth guide as to source capital. You can also go to the Source Capital website, which is sourcedcapital.co, and you can download guides from there as well. So I could brush across it in 10 seconds, but really, if you're looking for more depth, there's loads of information available from our website. If you're looking for specifically for capital information, go to Source Capital. Next question, coming thick and fast. So I'm a deal sourcer and I want, so let me actually read it out for you because I know you can't see this. So I am a deal sourcer and I want to know how to pre-qualify investors so I don't send deals to them unless I know they are serious. Yeah, that's a really good question. We have a very set process that we give out to our franchisees, and that set process comes with 2 contracts that we give to them. And you know what, the main, going back to mindset, the main change that you need to have when you're looking at investors is you're the one that is rare in this situation. If you're looking for 100 grand, you could raise 100 grand from lots of different people. But to buy that property that you found, there's only you that have got access to that. So for me, if investors are not doing what I tell them to do, and we do KYC, know your customer checks, we do AML checks, we do all that kind of stuff, that's all part of the process. If the investor is not filling out the paperwork as they need to, that investor does not work with me. I'm not interested in working with people that are going to mess me around. My time is too precious, and so is yours. So you need to have a set process, and if investors don't do it, you don't work with them. They've lost the opportunity. Be very, very, what's the word I'm looking for? Be very careful how you spend your time, because other people will waste it if you allow them to. Let me read out the next one. How do you establish franchise area of existing locality already covered by existing franchisees? So, Mark, we don't actually work off postcode areas. We work off regions, and franchisees work within regions, and there can be more than one franchisee within a region. So, a region like the Northwest, the Northeast, Yorkshire and the Humber, East Midlands, West Midlands, London, Southeast, East Anglia, Southwest, Wales, Scotland. So we work within those regions because the way that you build your business is not based on your geographical location. The way that you build your business is through other people. So you go and speak to an estate agent. That estate agent gives you access to the properties that they have under their area, not necessarily under your area. We used to operate in postcodes. We don't anymore because the franchisees requested that we removed it. I hope that helps. You said for the first JV and second one, we can rely on source to get more experience. Yeah, if you find a property that you can JV with us on, you can go to that property every day. You can be involved in the project management. You can be involved in all of it, and you will learn from that, so that you can then do the third or fourth, or whenever you have the relevant experience, you can do that on your own. That's absolutely right. What methods do you know are good to attract serious investors? So the best methods that we have, to be perfectly honest with you, are social media marketing and podcasts and YouTube and putting out content, leading with content. That's what we see attract serious investors. How long do you think that this downturn will last? Well, that's a terrific question. Thank you very much for that, Martin. We're expecting this downturn. Well, it's difficult, isn't it? Because the situation consistently changes. We're currently expecting this downturn to last around 1.5 to 2 years before. But then let's be absolutely clear about this. The market will not then return to the same, incredibly hot market as it was before. What will happen 9 times out of 10 in this kind of situation is the market will recover very, very, very slowly. I would imagine that we're going to see a recovery process very similar to 2007, 2008. The whole situation that we're in is very different to 2007, 2008, but the downturn and the recovery, I think, will be fairly similar. In fact, 2007, 2008, in 08, the market went down 10%. The next year it went down 5%. I don't think we're going to get anywhere near that. We're not going to go down as much as that because the fundamental problem with the market is not the same. But I think the market recovery will be just as slow. Are franchisees only for individuals, or could it be a couple, as me and my partner? No, yeah, absolutely. We have lots of people that either work together with somebody that they know or work with a family member. So that's absolutely possible. Does the franchise fee include training, leads, access to investors, etc.? The franchise fee includes everything that I went through in that last slide that has tick boxes. Everything's included, absolutely everything. So yes, absolutely, it does include training, support, franchise, property leads, investor leads, and access to the funding. Advice for beginners who have no experience with property investments but are keen to get involved. Okay, this is my advice for absolute beginners, right? If you've got money behind you right now, then you've got an opportunity to take advantage of next year. Focus on your education. If you don't have money behind you, partner up with somebody who has. You know, find people that are in property and offer them something that you can offer. So it might be time, it might be, you know, due diligence, it might be boots on the ground, it might be something, but offer them something and get experience and get to know property. I hope that helps. Prue, is the fee for year one only? So the £12,500 is for a 5-year period. So that lasts for 5 years. And then the monthly fee is 245, and that's throughout the 5 years. I hope that helps, Prue. Is the government trying to dissuade PRS sector because of all of the taxation and legislation being introduced? How do you deal with this? PRS, have you used the right acronym there? Do you not mean buy-to-let sector or property? PRS is the property redress scheme, right? Do you mean the property sector as a whole? Look, the government, it's a really confusing situation, isn't it? And I often sort of look at this and just lack understanding of where the government's going, because I get what you're saying. Buy-to-let landlords and people that own property are being taxed more and more and more. But you look at the press and you look at the information, and there's more and more need for private landlords, because we don't build enough houses in this country. So we need private landlords in order to house everybody. Just, you know, straightforward maths. So I don't understand why the government is, over the last couple of years, certainly taxed landlords so heavily. However, do I think it's going to go much further than it already has? I'm not so sure. Are we still making an awful lot of money out of the properties that we own? Absolutely. Why do I think a lot of people are having that conversation that buy-to-let landlords are being squeezed out of the market? Either because the deal's not good enough in the first place, or because they're listening to media. And what the media do is they take government sort of announcements and they just take them to the nth degree, and they overinflate the importance of those announcements. We still buy properties which we hold and we rent out to people because the deals work. Are we having much more of a problem with it? Absolutely not. Maybe it means that we have to be a little bit more selective about the deals that we take on, but we're perfectly happy to do that. Private rental sector. Sorry. Yeah, got it. Buy to let. So I you know, got it right. Sorry, it's just because it was called PRS and the property redress scheme is called PRS. So I misunderstood. There we go. That's all the questions done, guys. Thanks very much for being here. I really appreciate your time. Thank you so much for spending the time with me. I hope you found it beneficial as well. I hope the perspective that we have here at Source has benefited you. If you are interested, I haven't put the email address up on the screen. If you are interested, we're going to send an email out to you tomorrow. Look out for that and use that to get in touch with us. If you want to get in touch in the meantime, sam.clayton@source.co. sam.clayton@source.co. Send an email over to Sam and we can help you out. We can answer your questions and take you forward from there. But thank you very much for your time. Much appreciated. And I hope to speak to you soon. Thanks very much, guys.